Hello, Mac O'Brien and Rob Stein discuss the current market environment.
Hello, everybody. Welcome. This is Mac O'Brien with Astor Investment Management. Today with us, we have our CEO and founder and chairman of the investment committee, Rob Stein.
Hey, Mac.
We have a lot of clients calling in. And so what we wanted to do was put together a very impromptu 3-4 minute recording that we can send out to our clients. Rob, you've been in this business a long time. You worked on the Federal Reserve under the chairmanship of Paul Volcker. You managed the prop trading desk for some of Wall Street's largest banks. You started your own firm in 1994. What do you make of all this?
Yeah, it's definitely a stressful period of time. We haven't seen a reaction to this in quite a long time. And quite frankly, the fixed income market, I don't think I've ever seen a reaction in the fixed income market to something like a pandemic or truly an outside force.
Right.
You combine that with some of the issues in the energy market, and you get the type of volatility that we have today.
It's truly unprecedented. Most advisors that use us on behalf of their clients, right, they use us as kind of a risk mitigation approach that can capture good portion of positive returns during bull markets and expansions, but really it's the contractions or deep drawdowns in equity markets that we're able to provide a large value. In terms of that and where the portfolio is positioned right now, shed some color on that.
Sure. So you can't prepare for this in the middle of the fight. And so in the middle to the end of last year, we started reducing our exposure to stocks. The economy had started growing at what we'll call trend or average growth. And average growth comes with average volatility. And at the end of the day, somebody will look at the drawdown for this and they'll measure it and they'll say, wow, that has happened before. And the only thing that's probably noteworthy is the speed that it happened. And that's not surprising in the new environment. We seem to figure things out faster, get to our destinations quicker. So Astor, not anticipating this, but anticipating that the economy wouldn't be healthy enough to handle an outside influence, reduced exposure to stocks months ago. And so we sit here in a position with much reduced exposure to stocks, almost in half, and some diversifying assets that are benefiting the portfolio as well. But we sit here in a comfortable spot. A comfortable spot because if the timely data, the data that comes out very, very quickly, starts to deteriorate and forecast a recession or a contraction, we're very, very well positioned to be able to react to that. And Astor has portfolios and tools in place to mitigate contractions and recessions and come out in a good spot. We could recover quickly. We can even produce profit in that environment and be able to have a lot of powder dry when the next expansion occurs.
Yeah, I came into the business in the early 2000s, 2003. You've been around for obviously a bit longer than that. And I can remember through 2007, 2008, that you sit there and people say, is this the end of the world, right? I mean, that's kind of the feeling you get when you actually look and you see limit down today. Today's March 9th in the markets to start off the day. But really what happens is that the world does not end and the markets tend to be in a stronger, more resilient place once the lessons are learned from whatever's happening right now, right? So I think the most important thing that you said is that we don't react in the middle of a fight to what's happening. We have been reacting to economic data for the past 18 months, which put us in a position to be limited exposure relative to where we could be in a very strong economy. And then from now, it's kind of watch the jobless claims, watch the employment data, the output data as the coronavirus has an impact on it, and react accordingly.
No, that's a great point. And not just the coronavirus, but all the other things that occur. And so just to surmise. We're very comfortable with the spot we're in. Now, of course, our portfolios are going to have an impact, but we're in a spot where we don't have to react on a particular day's notice. Markets don't go down in a straight line. We could respond to the data as it comes out. And as you know, the investment committee has lots of pedigreed guys on it. And we have the ability, we're fortunate enough to be able to make wise moves as the data tells us, not react to price, and have this be an opportunity for us. If the economic data deteriorates to where we have a recession or a contraction, and it has an equal opportunity if things recover and the data either improves or doesn't get worse, to buy some what would eventually look like a cheap equity exposure. So
And that's
we like where we
sorry.
are.
Yeah, and Adam's going to end it off with the fact that you said we don't react to price data. So we're not selling because the market fell. That is not something that we do. We react to economic fundamentals.
Yeah, no, Mac, that's a great point. And further to that point, we were reducing beta as the market was rallying. And in fact, shortly after we reduced the last trickle of equity exposure, the market rallied a little bit after that. So it wasn't a surprise. Markets go up when the economy's average, but we felt good that we had the right exposure for the environment.
That's right. Thank you for listening.
Yeah, and Mac, just a little shout out to the team. Astor won the Lipper Award. It's a real nice acknowledgement that after 17 plus years of managing client money, that we got recognized. But
So
Mac,
Rob,
if
I'm
anybody
gonna,
wants to reach out, any of the PMs, they could schedule a call. Good luck to everyone, and hopefully we can be helpful. Cheers.
Astor Investment Management, LLC is a SEC registered investment advisor. All information contained herein is for informational purposes only. This is not a solicitation to offer investment advice or services in any state where to do so would be unlawful. Analysis and research are provided for informational purposes only, not for trading or investing purposes. All opinions expressed are as of the date of publication and subject to change. They are not intended as investment recommendations.